Hey everybody, it's Crypto-Anarchist here, and I'm going to be making a video today on taxes for cryptocurrencies for 2017 and before. Just so you guys know, I am a crypto-anarchist, so a lot of you will think that I'm going to say, don't pay any of your taxes, but that's not what I'm going to say at all. What I'm going to say is that before 2017, most cryptocurrency purchases and transfers are like-kind transfers that you can defer taxes on. Now, if you defer taxes on them, you have to do it properly. So you can't just, say, oh, it's a like-kind transfer, so I'm never gonna, have to pay taxes on it. If it's a like-kind transfer, you're deferring taxes until later, so you need to know the basis or the original cost of the property that you originally bought, and so that's what your taxes will eventually be based upon. So, I know a lot of you guys will be thinking, I'm going to be trying to show you guys how to not pay taxes. That's not what this video is about. Video is about how to legally minimize your taxes, okay? I'm talking about deferring taxes until a later period, and that's all I'm going to be talking about. The next thing that I want to just show you guys before we go to this video is that there's penalties if you do not comply with tax laws. The thing that you have to remember here is that if you read this last sentence here, it says there's penalty relief that may be available to taxpayers and persons required to file an information return who are able to establish that the underpayment or failure to properly file information returns is due to reasonable cause. So the reason why you have to or the reason why I want to tell you guys this is because cryptocurrency has done things that have been unbelievable. Some people have turned hundreds of dollars into millions of dollars. So if a normal person, if they put $100 into property, like if that would be like buying 4 silver coins, a lot of people wouldn't even really report that, to the IRS, and the IRS wouldn't care. However, like in the world of cryptocurrencies, we have some people who have put, $100 into Bitcoin, and they're now millionaires. So, if they're the IRS will understand if you have some if you don't have complete information, just because this is the weirdest thing that's ever happened. Cryptocurrency in the world of finance, it's absolutely insane. So a lot of people are real worried. They're like, hey, I didn't keep all this information because I wasn't really sure I needed to. Just do the best you can. Do the best you can. Obviously, I hope you've kept at least the price of the cryptocurrency trades and the dates you made them on. But I'm going to go ahead and actually talk about some of the issues that I'm seeing in a lot of the articles that I'm seeing that are written on this topic. So there's two types of articles that you'll see in the public sphere right now that talk about cryptocurrency taxes. One says that basically everyone who is trying to use like-kind exchanges is doing something illegal. This is untrue, and actually this article we're going to be talking about here is somebody who basically states in the beginning that cryptocurrency traders are potentially doing something illegal, and then later on he contradicts himself in the article. But the other type of article that I see out in the public sphere is the article that says that it's the anarchist article that says, you can just never pay your taxes, the IRS won't know. And it's like, I'm not sure you really want to mess with that. I mean, if you want to, that's your deal, but I'm never going to advocate for people to, I'm never going to advocate tax evasion. You should probably pay your taxes. And again, the reason why I think you should pay your taxes is because, especially with cryptocurrencies, you can defer your taxes for a long time, even under the new rules for cryptocurrencies, so long as you structure so long as you structure your investment correctly, you can still defer taxes through the use of corporations and different things like that, even for years to come. So I'll tell you guys later on how to do those taxes for the next few years. But again, I really want to tell you guys that paying your taxes for cryptocurrencies isn't nearly as bad as everyone's making it out to be, and I'm going to tell you why. So again, going back to this article here, in this article we've got a CPA who is talking about cryptocurrencies, and he's going to contradict himself. So in the beginning he talks about how a lot of cryptocurrency investors are inappropriately deferring capital gains taxes, and that is true. A lot of people don't have the required information. They're not really doing it correctly. But for most people, they could get the required information pretty easily, or not easily, but it would take them some time. They'd have to go back and see when the date of their trades, and then they could figure out the price of the trades, and so they could get all the information. But then he goes on and he makes a couple mistakes here, and I'm going to actually explain these mistakes in detail. And I want you guys to know I'm not a tax attorney. However, I am an entrepreneur who understands the basics of tax law, and I can apply it to the different things I do. And this guy makes a couple mistakes here, and I'm going to explain them in detail. So the first thing he talks about is, he's talking about an example of how people are inappropriately deferring capital gains taxes, and he says, exchanging Bitcoin to Ethereum and then using an IRC Section 1031 like-kind exchange. He says that's okay, but then if you sell Bitcoin for US dollars and buy Ethereum for with those US dollars, you would have to pay taxes, pay capital gains taxes. He says something is wrong here, and I would actually disagree because there are two types of Section 1031 like-kind exchanges. There are immediate and deferred like-kind exchanges. So for immediate like-kind exchanges, the thing that you have to remember is that is a property-to-property like-kind exchange. So that is crypto to crypto. And we'll go over in later on in this video how the gold to silver like kind exchanges and gold to gold bullion like kind exchanges prove that cryptocurrency like kind exchanges are tax deferred. But this guy doesn't disagree with the idea that crypto to crypto exchanges are tax deferred. What he's saying that isn't tax deferred is Bitcoin to US dollar and then to another crypto. So he says crypto to US dollar to crypto is not tax deferred, and that's actually not necessarily true. And the reason why that's not necessarily true is because there are immediate and deferred exchanges. So the differences between an immediate, the immediate exchange is, you immediately sell property for property. A deferred exchange is when you sell one property for cash, but you use that cash to purchase another property. So the rules for a deferred exchange, they're kind of complex, and so generally speaking, the way that deferred exchanges work is it's basically like a company that does these types of transactions in order to prove that you're doing it correctly for tax purposes. The issue though, why most CPAs will tell you that a deferred exchange is not usable for cryptocurrencies is they will say that you don't have these, the companies through which you can do, I think they might be like acquisition firms or something like that. But anyways, they'll tell you you don't have those firms or whatever, so it's not a deferred exchange. However, those firms can't exist yet for cryptocurrency anyways because it's so new. So the one thing that the IRS has never done is they've never said anything about like-kind exchanges for cryptocurrencies, so they can't tell you that you can't do it if they've never told you, that you can't do it. So they've never made a statement that you can't do deferred like-kind exchanges for cryptocurrencies, so how can they penalize you for it? Now again, this is an argument that you would have to be willing to, make in front of a tax auditor at some point in time, but you should be able to make the case that so long as you follow the rules for what a deferred exchange is, and I think with deferred exchanges something maybe like 45 days or something that you have to eventually buy the property. So most people who do cryptocurrency trades are trading much more actively than that, if you would consider yourself basically doing cryptocurrency trades. So I think those would potentially qualify so long as you make the trade quick enough. Especially because for a lot of cryptocurrency trades you can't even get over to the other cryptocurrency potentially without going to fiat. Sometimes you can, sometimes it's easier to just go to fiat though. It just depends on the exchange. And so, you could probably actually argue, unlike this guy does in this article, that going from crypto to the US dollar to crypto is actually a deferred like-kind exchange. So he kind of lies when he says this, and we'll actually see coming up here in the next articles here that he knows he lies. So if you look at the second sort of bolded line there, cryptocurrencies may not qualify as like-kind property. So he blatantly says he does not know. He says they may not. They may not. So the one thing that he says here is Section 1031 specifically excludes stocks, bonds, notes, and indebtedness. There's no cryptocurrency or virtual currency definition there. And the IRS does have a definition of a virtual currency, but it does not they never said whether or not it was involved with like-kind exchanges. So again, if the IRS has never said that you cannot do it, how can they penalize you for it? Okay, and I know that's an aggressive stance, but why not be aggressive with this? I mean, if you can defer your taxes, and again, you're not avoiding taxes with this. If you defer taxes with a like-kind exchange, you're just paying taxes later on. You just have to make sure that, like, if you make this argument before the IRS, it should be completely legal. And again, I say it should be because the IRS has never made a statement on any of this, and so they've never tried to penalize anybody for this, as far as I'm concerned. But it should all be like-kind exchanges, even if it's deferred like-kind exchanges. Even if you went from crypto to the US dollar to crypto, so long as you did it, I think it's before 45 days. And again, you guys should look this stuff up yourself. I did most of my trading crypto to crypto, so I don't even have to worry about it. Mine were immediate exchanges, but even the US dollar could be deferred exchanges so long as you go back to crypto eventually, within a certain period of days. So again, this article, this CPA right here, though, he's blatantly saying that he does not know if crypto is like kind to like kind exchanges, and he links an article, and then he specifically talks about a ruling between gold and silver. And I actually want to look at this, and so I want to specifically show you how this ruling between gold and silver basically proves that the IRS decisions will make cryptocurrencies like kind exchanges pre-2018. Everything before 2018 will be like-kind exchanges, and you might even get deferred like-kind exchanges. The deferred like-kind exchanges, again, that's a very aggressive argument. Be prepared if the IRS audits you just to give the argument, and maybe they'll tell you you're wrong. Just, if you are wrong, just be like, okay, pay the taxes. There will be a small penalty. It's not tax evasion so long as you're making an effort to do it as correct as possible. And remember, the IRS has not answered many questions on cryptocurrencies, so there's going to be a lot of errors in the community just because nobody honestly knows. But I'm going to try and make a good argument for you guys here that you will understand. So if we look here at this gold and silver rulings that the IRS has made, the like kind exchanges that they have, there's the first one between the 1550 peso gold coins, the Mexican 50 peso gold coins, and then the Austrian 100 Corona gold coins. That's like kind because they're both bullion types. They're both, the value is measured by the gold content. Okay, so the thing you have to remember about this is that these two coins, I believe, they have the same gold content. Like they have the same ratio of the same alloys, I think, in the coin. So that's a very easy case for like kind transfer. There's literally basically nothing different between the coins. The next one that I want you guys to look at is the second one. This one is a numismatic between bullion coins. Numismatic between bullion are not considered like kind because they have different use cases. Bullion coins are valued for their gold content. Numismatic coins are valued for their rarity. So a numismatic for cryptocurrency would be like one of those physical bitcoins. I would assume those sell at a higher price than the actual price of a bitcoin, and that's because of their numismatic value. So that's not like kind. Okay, so that doesn't really affect cryptocurrencies almost whatsoever. There's almost no numismatics within cryptocurrencies. The next ruling is between gold bullion and Canadian maple leaf gold coins. Now the reason why they put this in here is because the Canadian maple leaf is technically considered like it's legal tender at a face value of $50, but its value is, it's worth probably thousands of dollars at the time of this ruling. I don't know what year this is. Maybe it's only worth hundreds of dollars, but it's worth more than its face value. And so the way the IRS deals with this is they say it's not actually legal tender. They're both bullion coins because that's the way they're used. So again, the IRS says it's like kind so long as the two pieces of property are used in the same way. Why does this apply to cryptocurrencies, and why is this big for cryptocurrencies? Because Canadian maple leaf gold coins are they're super pure silver. Gold bullion is any type of gold bullion. So this means even if their gold content and the alloys within the coins are different, and like the percentages of the different metals, like because some gold coins have a lot of copper, some are very pure gold. This says it doesn't matter so long as they're valued in terms of their gold. That makes it like kind. So then that means even if cryptocurrencies have somewhat small differences, so long as they're valued in terms of being like in the same way, so long as they're valued in the same way and by the same measures, it's like kind transfers. So for cryptocurrencies, why I think this is big is just because this makes a lot of coins basically the same sort of thing. So a lot of cryptocurrencies are very similar. There's only small differences in the cryptocurrency, so you could almost say that's small differences in the metals within coins of gold. But anyways, the next one I want you guys to look at is gold bullion to silver. So gold bullion and silver are not like kind because they have different industrial uses. So gold is an investment metal, silver is an industrial metal. With cryptocurrencies, they're all investment properties, so they all have the same use case. So this does not apply to cryptocurrencies. Just again, like the numismatics almost does not ever apply to cryptocurrencies. The next one that we wanted to look at here is another one where gold coins have numismatic value, and then you had a circulating currency. And so this one actually could potentially give you trouble if you try to do a deferred exchange, because this is talking again, you're going from gold coin to a circulating currency. However, if you did something like the US dollar tether or gold money, you can make this case because it's not a circulating currency. Again, like I said, the deferred exchange or the deferred like kind exchanges, those are the ones where you actually trade for the US dollar. Those might be taxed. I'll tell you personally, I'm probably planning on taxing my deferred, or not the deferred like kind exchanges, but crypto to the US dollar exchanges, because for the simple fact that I think it's safer, and I didn't do that very often, so I have very little taxes I'm going to pay for that, so I'm probably going to just do it. But if you did, like if your exchange trades for the US dollar tether, that's technically considered a crypto, and then something like gold money I think is already technically considered a crypto, because if you actually look at the IRS's definition of what a cryptocurrency is, they call it a virtual currencies, and so they basically say virtual currencies operate like real currency, but it does not have legal tender status in any jurisdiction. And so the thing you have to remember about this is that it's such a wide definition that something like gold money or the US dollar tether should technically still be considered virtual currency, even though its value is pegged to a real world currency. And so that's interesting, and that's part of the reason that I think that they're changing the laws on cryptocurrencies. I will tell you right now, the new laws are pretty terrible, but there's still ways that you can, like if you actually make enough money that you can start a business with your cryptocurrency fund, you can start a business and then you can defer taxes for even longer. So there's still ways that you can defer taxes. It just gets harder, which is unfortunate. I think they might change some of the crypto to crypto laws because the crypto world, it's a real fast-paced environment, so you really need to be able to sell without having impediments to you selling. But anyways, going back to this last page of this article, though, and remember, like I know we've gone through a lot here, but the first page of this article almost made it seem like it was a crime to use like-kind exchanges, the Section 1031 exchanges for cryptocurrencies. But on the third page, just 2 pages later, this guy says the IRS has not addressed Section 1031 on cryptocurrencies. So if they've never addressed it, again, this is the argument I've been making, if they've never addressed it, if they've never given guidance on like-kind exchanges, how can they penalize you for using it? And again, it seems to, if you look at the way gold and silver is used, the only one that you might not be able to say that you can use like-kind exchanges for are the deferred like-kind exchanges. However, you can use like-kind exchanges for trades of property if you trade often enough. And so if you like show yourself to have enough of an involvement in cryptocurrency trading, then you can potentially defer the taxes anyways. That's a whole different way of deferring taxes, and you can look into that for yourself, and you have to qualify, you have to do enough trading. I don't know the exact rules for that. I'm not going to go over that here. However, again, like-kind exchanges for crypto to crypto, they definitely seem to be completely legal, and the deferred like-kind exchanges, as opposed to the immediate like-kind exchanges of crypto to the US dollar back to crypto, I think that the lapse of time that you have to do that is within something like 45 days for the way that you do deferred like-kind exchanges for property. But the deferred like-kind exchanges, that you could potentially make the argument for that just because crypto doesn't have any sort of these, I don't remember what they are, I think they're like acquisition firms that hold on to the property for you. And so that's the way that you do it with if you're selling like real estate. That's the way you do deferred like-kind exchanges. But with crypto, it hasn't been out long enough to have those the acquisition firms or whatever. So you can't really, you can't penalize people for that not existing. And then the second thing is if you trade often enough, like day traders do get some tax deferred benefits. You just have to trade often enough and qualify. And so, again, a lot of this information that they're telling you, page one, they tell you a bunch of bullshit, and then later on in the article, they tell you the truth. And the truth is here is that there is there's no one who really knows. No one who really knows. So why not be aggressive in your taxes? Because what can the IRS come and say to you? I mean, so long as they come to you and they're like, you haven't paid taxes on this. If you're like, I filed the proper form saying that, hey, here's the price of the cryptocurrency I paid on this date, but it's tax deferred because it's a crypto to crypto trade. It's a like kind exchange, and so it's tax deferred. The taxes will be paid later on. Like, what can they say to you? It's not like that's not tax evasion. The worst that they can do is say, no, that's incorrect. You have to pay the taxes plus a fee. But again, like immediate crypto to crypto exchanges, they've never given any sort of argument on it. So I would be very authoritative in my defense of what I had done, because this is what I'm going to do for all my crypto to crypto trades. I'm going to say they're like kind exchanges. I'm just going to file the proper forms and then say, hey, this is a like kind exchange. And if I do get audited, I'm just going to say, look, like I'm going to show these different articles I've shown you, especially the one on gold and silver, and be like, I'll show how it applies and be like, the crypto to crypto is just like bullion to bullion. It's the exact same thing. They are traded for the same purpose, or they have the same purpose. They're used for the exact same purpose. So be very authoritative in your defense of yourself, because there's no guidance on this. However, it seems to indicate, because there is no guidance, that you can do like kind exchanges, especially if you use it, or if you apply the rules that are applied to gold and silver. And even if you're doing deferred like kind exchanges, you might be able to defend that. If you do choose to use deferred like kind exchanges on your tax returns, then defend that authoritatively as well and say, look, there's no guidance on it, so I'm doing the best I can. You're still going to pay taxes on that. You're just deferring taxes until a later date. So it's not like you're evading taxes. You're just paying taxes at a different time. That's all you're choosing to do. And again, if you do trade often enough, look into the rules for getting tax deferred status as a day trader or a trader. I don't know the exact rules for that. I'm a long-term trader, so those really aren't going to apply for me. So I'm not really trying to do tax deferred trades all that much. But that's basically all I wanted to talk about for taxes. Most of these issues are overblown. Again, I know I am a crypto-anarchist, but I still would advocate paying your taxes. There's a lot of ways that you can minimize your taxes until a later date, until a time in the future where you've made a lot of money. Generally speaking, these are entrepreneurial methods, and so it means that you're either going to have to keep making money or you're going to eventually lose all your money. So it's much harder to do. It's a much harder lifestyle, but that's the lifestyle I would advocate. But anyways, I hope this video helped illuminate some of these issues for you and help to alleviate a lot of the fears that you might have when you read these articles that say, you have to pay taxes on every single trade you've made with cryptocurrencies. And the truth is that before 2018, you can make the argument that all cryptocurrency trades, including trades to the US dollar that were sort of done quickly, that it eventually traded back into cryptocurrency, were all tax-free, or not tax-free, but tax deferrable as like kind exchanges. Again, if it's crypto to crypto, I am very sure that all crypto to crypto exchanges were tax deferrable. They're all like kind exchanges according to the rules that apply to silver and gold. That seems to be the case. So I'm not worried about that at all. I'm not worried at all about filing like kind exchanges for all those trades for myself, and that's what I'm going to do. And so I hope that alleviates some fears for yourself. Again, you guys will have to you guys might have to do these taxes yourself, because like I said before, a lot of these CPAs, if you talk to them about having done cryptocurrency trades, a lot of them won't really want to work with you, and they'll be scared, especially if you don't really know what you're talking about. So you might want to watch this video a few times and sort of get a basic understanding of the tax law, maybe look some of this stuff up for yourself. It's really not that hard, actually. The question is can you find a CPA who is willing to sit down and listen to you, and are you willing to or are you capable of explaining this in such a way that they're not afraid of what you're talking about and afraid that they're going to get involved in a lawsuit? Because the CPA doesn't want to get involved in a lawsuit. constitute over your taxes. They really don't. So you know, you got to make sure you understand what you're telling the CPA, but you also got to make sure that this CPA who you work with or the tax person you work with is also willing to work with you. If they're not willing to work with you, then don't work with them. You know, if you have to file these returns manually and just do the best you can, and if the IRS audits you, tell them you did it manually the best you could because you couldn't get a CPA to work to you, but then give them the argument, and give the argument that you give authoritatively, if you ever have this, about why these are like-kind exchanges. Because again, according to all the information that the IRS has given out, which is basically nothing on cryptocurrencies, they should almost all be like-kind exchanges. It's like crypto to crypto are all like-kind exchanges, and then you might even be able to do deferred like-kind exchanges. Just because crypto is so new, you can't expect them to have the acquisition firms that you're supposed to use. So and then if you don't have deferred like-kind exchanges, people who trade it to the US dollar, if you trade enough, you might get the tax deferred status that you know, traders can get. But again, I don't qualify for that, so I don't know the exact rules for that. But I just wanted to alleviate a lot of the fears that are out there. But I did want to say, you know, you don't want to take the road of paying no taxes and of evading your taxes and just trying to screw over the IRS. And you also don't want to take the road of paying the IRS way more money than you should be. You should pay the IRS the legal minimum, and the way to pay them the legal minimum is to keep reinvesting, and that's actually, you know, that's good for the economy, to keep your money in savings and investment. That helps build new things. So anyways, I hope you guys enjoyed this video. There will be more coming out soon.